if tokenized gold and silver could kind of be a way around these sorts of things, and even maybe could attract some people who are more interested in crypto and maybe haven't had an interest in physical precious metals to also dive into the space. What are your thoughts there?
Yeah, Jesse, the cryptocurrency and the digital currency is a very controversial subject. My personal view on that, and I came from the dot-com era, as I mentioned to you. I have an engineering degree. I was a programmer. Is that the cryptocurrencies were invented by the authorities to divert attention to gold and silver, and honestly, even though a lot of people critique about the SWIFT system, it works. Okay, it's not like just one day in the bank you discover some of your money is fake. Like the counterfeits is a very minority of the system. So the system has a chain of integrity. The current fiat system has a chain of integrity. It's not, and the SWIFT system works relatively well. And so the whole crypto, I believe, is sort of paving the path to the eventual adaptation of the central bank digital currency, which is inevitable. It's coming. And the reason for the CBDC, the central bank digital currency, is that the authority want to control, because now everybody's so wealthy. They used to be able to control you because you're poor. But now that everybody has money, now they have to find a different form of immobilize you. Okay? So the way to do that is, first of all, it used to be that, whatever I credit, we can travel, it's really a pain in their eyes. So now they're imposing health mandates, carbon mandates. And then soon enough, it's going to be the digital currency mandate, the central bank digital CBDC, where they're going to dictate on when you shop, where you shop, and what you shop. So for example, if they want you to work at 7 in the morning, they're going to impose a curfew during weekdays at midnight. So your money is not going to be good past midnight. If you have a 7-Eleven next door to you, they're not going to let you buy a can of Coca-Cola in Costco that's 40 miles out. And if you had consumed too much carbon, so they're already talking about a carbon limit of 1,000 kilos per year. Well, a flight from Taipei to Toronto is 950 kilos. Okay, so if you were endeavor to take that trip, that means that you have to be eating tofu for the rest of the year. And so this is really what they're getting at, and the crypto is a protocol and the advent of training for you to get to that eventual central bank digital currency. And now in gold-backed currency, who's the arbiter, right? That's the question. In fact, I think there's a lot of countries that had tried to experiment to stabilize with good intention of instituting a gold-backed currency, but that's all been shut down. Like even Switzerland had a referendum on restating gold to back their francs, and just a lot of pushback because they know the guys that we talked about that are managing the world managers. They know that they cannot have that because the good money will eventually overcome the bad. And so I don't know how it's going to play out and whose digital currency. You're going to have several different versions of the gold-backed currency as actually right now privately in circulation. So it's all about who's the arbiter, who's watching the watchdog, and in the end, just there's no better way to only gold and silver physical, which is what I'm advocating big time. And I've started buying gold again for the first time this year after 10 years hiatus, because I see the paper game eventually can be blown up, and that I think 10% or 5%, Jesse, in the overall scheme of things is immaterial. You've got to own the physicals. You've got to own the physicals in different jurisdictions, and that is what I recommend. So yeah.
So I want to touch on silver specifically here, because when we chatted in our previous meeting, you said it presents one of the greatest opportunities right now. So maybe walk us through that and the best ways you think to play the sector for your average investor. Is it always best to start with an allocation to bullion and then maybe move on to the big producers and then maybe speculate on developers and explorers? And as a follow-up, what are the main things you look for when evaluating a silver mining company?
Right, so you talked about three things. Why is silver going to be a good investment? The difference between investing silver versus in equities, and if we want to decide in equities, what are the things you got to watch out for investing in mining equities? Different things are trading on usually in a good equilibrium, but they do break out, like the price of an apple versus orange. Or the ratio of wheat versus corn versus soybean. There's actually a ratio of gold and silver that has been through the test of time, or the ratio of gold to oil, because these are limited supply. These are also the form of money and store of wealth. Historically, gold and silver is trading at a band between 30 to 100, and with an historical average at around 70. So the ratio peaked. So when gold to silver ratio is at heights, that means that there's a lot of fear in the street. There's not a lot of froth. There's not a lot of speculative demand. There's not a lot of speculators. There's no greed in the market. Subsequently, when the gold to silver ratio is low, that means silver is relatively more expensive than gold. That means that there's a lot of greed. There's a lot of speculation. And the audience of gold and silver are also different. Gold is more central bank play, where silver is more retail play. That's why they call this poor man's gold. And then there's also silver, it got this dynamics of the industrial demand on batteries, on solar panels, on electronics, and so on. So if you look at where we stand right now, gold to silver ratio is at around 80. 2,000 gold and $25 silver. Not only 4 or 5 months ago, when there's a climax in the fear, when equities are things like gonna break down and everything's gonna go, the blood on the street, and Robert Kiyosaki's, the Peter Schiff is having their field day, and that ratio was 100. Gold was $1,700 and silver was $17. So only once or twice or 3 times in history has that ratio been reached, and that's why at that time I called the bottom for gold and silver, and also the top for the dollar. That was October 2022, 6 months ago. So since then, that ratio has quickly descended to 80, and gold right now is just over 2,000, and silver is 25. Once that ratio pendulum is reached one way, it's gonna swing down the other way. It's almost without fail. And last time pendulum swung, it was silver went to $50, and gold was around 1,600, 1,700. So that ratio was 30. So if I peg the ratio of gold that's imminent to break out, say 2,400 this year, and then just say, if things go really, if we get a bit of breather on interest rates, a bit of relief rally, a bit of a breather in sort of bearish view, and the resumption of a bit of a greed in the market, at say even the 40 to 1 gold to silver ratio, which is at the lower end, and then divided by 2,400 divided by 40, you're looking at around $60 silver. So that would be sort of on the top end of my forecast for this year. But on the low end, I see gold. I see if gold were to break out, silver is going to break out that important resistance of $28. There's a brief stop, technical stop at 35, but after 35, it could go anywhere. It could go wherever it needs to go, and the top is only established in hindsight. So relatively, in terms of the risk reward, gold's upside from here is around 20%, but the silver's upside here could be easily a double. So that's why I see it, and fundamentally strongly back this thesis. A lot of the gold investors, some of them are also retail, they will looking to swap into silver as well. So now talking about the question of silver versus equities. This is how I akin to compare to say holding US dollars versus S&P 500. Gold and silver is money. It's a store of wealth. It's a currency. It's very liquid. And so you would, depending on your risk tolerance and time horizon, just if you're 80 years old, right, you're not into speculation game. You already figure out what is your nest egg, how much money, how much year you would spend. So in which case, it's not entirely like I would not be opposed to say put some money in very short-term T-bills, ride the highest rising rate, get some yields, and then put some money in gold and silver. You don't need to be specking on the equity market because you cannot, because a 20% volatility down is not in your cards. You're not ready for that. So the risk tolerance and your time horizon is very important. So for these investors that has a 3 to 5 year horizon, and looking for a bit of maybe risk-adjusted reward more than say the 20% looking for gold, then if you're looking at mining equities, and I think a good example would be if a silver miner break even is at $30 and price of silver is 30, the company's not going to be worth much money because generally no earning. But if all of a sudden silver price go to $50, and if the mining company were to producing 10 million ounces a year, then all of a sudden the cash flow went from $0 to $200 million. And if you've got a reasonable PE, the company went from, peanuts to multi-billion-dollar. And this is what happened last time round when Silver's Pool went to 15 in early 2000s. There were several junior companies like First Majestic and Silvercorp that went from $50 million non-producer to multi-billion-dollar 10 baggers. So that is how that company. But but at the same time, I want to just preface really quickly that for every company, Cinderella success story, unicorn, you have 3 companies that failed to get to that because of geopolitics, because of the inherent operational risk of a mining operation, or because of mismanagement of the mine, or some technical issues, or whatever, right? That's why I'm a very strong advocate of putting eggs in different basket in a mining company. And even the insiders within our industry, I often talked about, I personally lose a lot of money in investing in junior mining. That's somebody with 20 years of history and that do nothing but in the mining sector. So, and I've several then go belly up. It's like Warren Buffett said, right? If you're 30% bet, you just want to make sure you hit that home run, not to cash out too early, and then that would more than compensate for the other strikeouts that you have seen. But I think just a quick note in that, besides Silver Elephant, which is because right now it's a buyer's market, there's more opportunities available in the mining space, and that there are capital that are deploying into the space because of the carnage from the cryptos, and then last year's the equity correction. You don't need to be speccing out for exploration story. There's plenty of companies out there. Several companies are quality and already made a discovery. The money they invested in the project exceeds the valuation of what they're trading right now. So I think these are very interesting stories that you should look into. And I don't buy into Rick Rose saying that management is paramount, the number one indicator. Well, if you have a lousy asset, you should be putting lipstick on a pig, right? It's not going to fly. So you got to marry that asset, talk to the management, understand that can the mine eventually turn into, can they develop a resource that can turn into a mine? Because the cost of developing a mine, well, the efforts putting into developing a small project is almost the same as into a big project. So you want to make sure whatever project you invest in, it's got to have the potential of getting to at least 3 to 5 million ounces of gold or close to 100 million ounces of silver. So these are the availability of the CEO and the potential growth of the resource base are quite important to determine at least the initial sort of qualifications in your choosing the right mining company to invest.
Veldig smart å ha dette her. Veldig logisk det han sier. Og det urovekkende er jo det at Norge ikke har gull og sølv. Vi har alt i Fiat-systemet på børs, så det er veldig urovekkende. Og nå ser dere bare på denne filmen her, på 5 timer, så 2400 sitter han. Ja. Så, ja, nå er på 6 timer, så 3000 sitter han. Så det viser bare hvor, dette er en ny kanal jeg ikke har sett før faktisk alt. Så han hadde jo da kommet da med, dette er nummer 2, og dette var nummer 1 han hadde. Så det er jo sånn folk må gjøre, du må gå inn og finne og spore og kalle det på seg selv. For det er enormt med folk som er opptatt av dette med gull og sølv, for det er jo et gammelt og er nervøs av bitcoin-greiene. Det er jo jeg også, for bitcoin er en god teknologi, det er ikke det, men det er litt pyramidespill, altså hvordan de verdsetter selve bitcoin, det er det som er problemet. Så folk må bruke tid og prioritere og se selv. Jeg får jo, jeg kan på å si, jeg har abonnert på mange, så jeg får jo inn veldig mange økonomi som handler om dette, for jeg synes det er veldig interessant å lære om dette her greiene, for men det er jo en økonomisk veldig utfordrende tid vi har nå. Så jeg får inn veldig mye sånne kanaler som jeg har valgt. Jeg har jo fulgt med på dette siden 2016, og har liksom funnet ut hvem jeg er interessert i å høre på.
Hello and welcome
dette
to
også for eksempel dette
også at this point. It's just how long do they let it happen?
Ja, så det er opp til hver enkelt å finne ut av hva de vil satse på i den tiden vi er i nå. Om du skal satse på det gamle trykket, du vil satse på det nymoderne. Ja, det må være opp til hver enkelt.